Hello and welcome. In this video, we will learn what free float market capitalization is. Alright. Now, in the previous video, we learned what market capitalization is. Correct? Market capitalization is calculated like this. It is number of outstanding shares multiplied by current market price. For example, if there is a company that has a total of 10,000 outstanding shares and each share is priced at 100 rupees, then the market capitalization of ABC would be this much rupees. Correct? You know how to calculate this. Now, the thing is, out of the 10,000 outstanding shares of this company ABC, 1,000 shares may be with the promoters or may be held by the promoters. 1,000 shares may be with the government or may be held by the government. 1,000 shares may be with the insiders, meaning those who know the inside details of the company. And 500 shares may be with the trust, for example, an employee welfare trust. And after leaving all these, the remaining 6,500 shares may be with the public. Okay? So this is just a made up example by me. Okay? So out of the 10,000 shares, this is the shareholding detail. Okay? Now, what we do in free float market capitalization is that we neglect all these. The shares held by the promoters, by the government, by the insiders, and by the trust. So, we neglect all these and just take into consideration the shares held by the public. Okay? We take this into consideration to calculate the market capitalization. So let us do that now. Out of the 10,000 shares, this is the split. Right? We take only the shares held by the public into consideration to calculate free float market capitalization. So, free float market capitalization is equal to 6,500. This is the number of shares available to the public multiplied by current market price. Alright. Let us assume that the current market price is 100 rupees. So 6,500 multiplied by 100 gives you this value. And this is the free float market capitalization of the company ABC. Alright. Total market capitalization is the primary metric used to determine a company's overall size. Meaning, total market cap is used to determine if a company is large cap, mid cap, or small cap. And total market capitalization is the primary metric used to determine its total market valuation. Whereas free float market capitalization is a more specialized metric that is used to gauge liquidity and, most importantly, to calculate a stock's weight in an index. You know what indices are, correct? Nifty, Sensex, Bank Nifty, and so on. An investor would look at both. Total market cap tells you how big the company is, and the free float market cap tells you how many of its shares are actually available for public trading, which affects volatility and index influence. Okay? Total market capitalization will always be greater than or equal to the free float market capitalization. In a company with 0% promoter holding and no other locked in shares, meaning 100% of its shares are held by the public, the total market cap and the free float market cap will be identical. Okay? Now, let us learn the importance of free float market capitalization. First is that if the free float market capitalization is more, then the volatility of the stocks or shares will be less. Okay? Volatility will be less. Now, why is that? Try to understand. What does low free float market cap mean? It means that promoters, insiders, or the government are holding a lot of shares. Now, what they can do is manipulate the price of the stocks. So they can make the price go in the direction that they want. What happens due to this is, because of these random movements, either upward or downward, a lot of volatility is created. Whereas, if the free float market cap is more, then it means that public has a lot of shares. So the chance of manipulating the price of the shares is less, and therefore the volatility is less. Okay? If the free float is less, then even a small amount of volume traded will move the price by a large amount. Okay? Whereas, in the case of high or more free float companies, a lot of volume is required to make the price go up or down. So, this is why more free float means less volatility. Okay? Next, voting rights. You know what voting rights are, right? We have learnt about this. Everyone who owns a share of a company gets voting rights. So if the public has more shares, then their votes matter. If the free float is less, it means the public has less importance while deciding the important aspects of the company. Alright? So voting rights should be more, meaning the free float should be more. Next is the weightage in indices. You know what an index is, correct? Nifty, Sensex, Midcap Nifty, Bank Nifty, Fin Nifty, all these are indices. The weightage of a company in an index is decided based on the free float market cap. So if the free float is more, then the company has more weightage in an index. Okay. I will now go to my desktop and show you all these practically. Alright. So now I am in the website of NSE India, and here I will type TCS, and in the results I will click on TCS in equity. Okay, and when I do that I get this page. Let me zoom in. Here you can see that the total market capitalization of TCS is this much, and this is in crores of rupees. Okay. Down below you have the free float market cap, and the free float market cap of TCS is this much, and this is also in crores of rupees. Okay. So now you get an idea as to how many shares are with the public, right? You know how to calculate it. You can see that the free float is lesser than total market cap, right? Now in the same way, in NSE, I will say Infosys, and I will click on Infosys Limited in equity. In this page, you can see that the total market cap of Infosys is this much, and the free float market cap is this much. Correct? So this information can be obtained for any companies in NSE website. Alright. Now, in Google, if you search for Nifty companies weightage, you will get a lot of results. I will scroll down and I will click on this website by Equity Pandit. And when I click, I get results like this. Let me zoom in. Yes, okay. So here you can see all the companies that are in Nifty 50. Alright. Now I will click on this button here next to weightage, and I will click once again. Now this is arranged according to their weightage in Nifty 50. Reliance company has 9.59% weightage in Nifty 50. HDFC Bank has 7.49% weightage in Nifty 50, and so on. So here you can see the market capitalization of each company. Okay. Now, Reliance has highest weightage in Nifty 50 because it has the highest market capitalization and something known as high free float factor. Okay. Do not worry much about this, but know that the weightage depends on both market capitalization and free float market capitalization. Okay. Next is HDFC Bank. All right. Now, what are these weightages? I'm going to keep it simple and tell you in an easy way. If, for example, say 1, 2, 3, 4, and 5, if these 5 stocks are falling on any particular day, then you can assume that Nifty is falling. If these 5 stocks are moving up, meaning the price of these stocks of these 5 companies is moving up on any particular day, then you can assume that Nifty itself is moving up. Okay, so this is a very simple way to put it. All right, so the weightage of each company in the index is this much percentage. All right, so I hope the concept of free float market capitalization is clear.